Hello, welcome to Charting the Markets here on Monday the 14th of November. Of course, last week was a very busy one, and now we're going to try and pick through the bones of what we're seeing this week and the aftermath of that US election, but also we've got a handful of events coming up, but most notably already happened overnight in the Asian session. We did see Japanese GDP reading come up to 0.5%. That was up from 0%, but then we also got that previous revised higher to 0.2%. So all in all, certainly a good reading for the Japanese economy. In China, we saw industrial production up to 6.1, remain at 6.1, with fixed asset investments up to 8.3 from 8.2. However, we did see retail sales drop down to 10% from 10.7%. So all in all, it's very difficult to pick through whether it's necessarily net positive or net negative for the Chinese economy. Looking ahead, we've got the Eurozone industrial production figures, but largely it's a bit of a quiet session in terms of the European and the US markets. And therefore, I think the focus really is going to be on what the repercussions are of this Trump presidency, for both the markets, for sentiment, and for risk assets. Now, so far we have seen people moving into riskier assets and away from those perceived havens, and certainly we've seen the likes of the yen and gold really suffer quite heavily because of that. Certainly those are two markets we're going to be touching on today. Looking at the indices space, we have seen some very choppy markets in the wake of that US election. Of course, initial selling overnight led to substantial upside. The Dow Jones Industrial Average just seems to hit all-time highs constantly at the moment. So certainly the US markets are looking very positively on the Trump presidency. Closer to home in Europe, it's a little bit more of a mixed bag, quite honestly. If we look at the FTSE, we can see today we are in the green in terms of the daily candle, but we have seen quite a lot of choppiness, and the back end of last week has seen this deterioration. Now, you can see it more clearly on, say, the 4-hour chart. You can see here that actually, we sold off sharply, we rallied, regained that previous high, came back to the 7,000 mark, and then have been reversing lower since then and seeing a downtrend. Now, yes, we're seeing a rally so far this morning, but at the moment, that's just playing into the downtrend we've seen since that peak back on the 10th. And as such, we'd need to break up above that previous swing high to point to anything otherwise. Now, you can see here, so far we've attempted to break up to the 76.4 retracement on 3 occasions. Failed to do so. I guess we've got this moving average cluster, which is a 250-hour SMA, which seemed to be the sort of top end of this rally for the time being. Essentially, as long as we don't break up above 68.53, it looks like we're going to turn lower once more, in line with the deterioration that we've seen over the past 2 trading days. And as such, this 76.4 is very interesting as a potential reversal area. You can see stochastics starting to roll over from overbought. So there are some signs that we could start to see the sellers come back into play for the FTSE 100. In terms of the DAX, so over in Germany, we can see that we've come up to this crucial level, 108.07. Now, 108.07, if we take it out to the weekly, we'll show you exactly why that's so important. We've got a symmetrical triangle. We saw the breakout towards the top end. We broke up above 105.32, which gave us a bullish outlook. But since then, and that's way back in August, we have failed to break up above 108.07 time and time again. Now, we have been tracking this descending trend line somewhat as newfound support. Now, if we look closer, the daily time frame shows that actually we have been respecting this sort of lower trend line. 4 touches on that, absolutely hit it perfectly on the nose around about that election day. And it's brought us back up to 108.07. Now, if you look at this pattern, initially it certainly looked like a reversal pattern or a bullish pattern, given the fact that we saw this move coming into it. Yes, we were seeing lower lows and flatlining tops. However, given the fact that we started seeing higher lows and a move back towards 108.07, it pointed towards a bullish breakout. That didn't happen, and we actually broke back below 103.47. Nevertheless, we're back at the scene of the crime, 108.07. If we break up above this level, then all of a sudden it looks like, and we'll take it back to the weekly time frame, it looks like we're going to see a breakout, and the next major level of resistance is 114.34. Now that, of course, is a substantial way away from current price action. That's around about 600 points. So we have a big area of clear air above current price action. 108.07 is going to be the level to be looking at for today. If we break it, then all of a sudden we could see a substantial rally. And remember, closed candles give you more confidence. An hourly close, a 4-hourly close, that gives you more confidence if we get that above level, rather than just seeing price action flash through 108.07. Often you can see fake outs. In terms of price action today, we could either see a break through that, which should set us up for a strong period and strong week, or if we start to see some sort of bearish reversal from this 108.07, then this could be the point where we start to see the bears come back into charge. So I do think this is a really pivotal level today, and how we respond to this is going to be absolutely crucial. Bearing in mind the FTSE 100 is turning lower from around about that simple moving average cluster alongside the 76.4, and we've hit the 108.07 for the DAX, there is a good chance that we could start to see this weaken somewhat. However, that's not necessarily the story when it comes to US markets. The US markets have been absolutely smashing it. You can see here we've seen new all-time highs on nearly a daily basis. We can see that candle on election day was quite incredible, and certainly the fact we closed so substantially higher really says a lot. The next day we got this Marubozu candle, a little bit of indecision following that, but you can see today we're starting to regain ground and we're getting back in the driving seat with this upside momentum. Now you can see that it has been relatively consistent. Now you can see high highs, high lows, high highs, high lows, time and time again. And as such, you can see, yes, we're starting to round off. And if I show you on the 5-minute chart, it might look a little bit clearer. So you can see that, yes, we're starting to roll over. That gives us a potential for a sell-off. But whether that sell-off happens or whether it doesn't, a sell-off would just give us a better opportunity to get long, in my opinion. As long as we don't break below 187.41, then a bullish outlook remains in play. Look out for support on previous resistance, 188.94 as well. So we could see a pullback, but that pullback would just be seen as a good opportunity, at which point we'll be looking at our Fibonacci levels for potential entries. And that's where you can be looking at, say, the 61.8, 88.30s, or the 76.4 around about 188 kind of area. So whether we hit those or not remains to be seen, but a bullish outlook remains in play, and hopefully we can get a bit of a retracement to get in for at a cheaper price for the Dow. Looking at the FX space, we've seen a lot of choppiness, of course, with that US election, but also we've seen a lot of indecision for different markets. It hasn't necessarily just been the case that the US dollar has gained against everything or lost against everything. We have seen quite a lot of differentials between different markets, depending on how they're perceived in terms of safe haven plays or not. Also in terms of how they're perceived in terms of their relationship with commodity prices. Of course, we've seen commodity prices really slammed since that US election, and that has hurt some of those commodity currencies out there, the Australian dollars, the Canadian dollars, and alike. Nevertheless, we'll look first at what's happening in terms of euro dollar. Euro dollar, we can see, has been suffering really heavily. We're going to bring it firstly to the weekly time frame to show the wider perspective. You can see this big sort of M formation I've been talking about for months now, and you can see that we have, of course, continued to move in that trend, moving back towards the bottom end of this M formation. Now, 107.10 is the support level that's near current price action. That's the low that we had here from early January 2016. Certainly not as important as the lows that we've been looking at around about here, 105.40, and certainly the 104.62. But it's a level to be looking out for today, 107.10. Now, in terms of nearer term price action, the daily time frame looks like this. We can see that we've clearly broken below this 108.51. That gives us a continued bearish outlook. Yes, we're seeing a bit of a bounce, but if we look in terms of the hourly time frame, we can see that we haven't broken out from this downtrend. You can see it's very clear, this downtrend, and as such, as long as we don't break up above the more recent swing high, and I guess this is the difficulty in this one, you could say possibly this might be a swing high, but it's not necessarily convincing. You could say this level is probably the more important level. I mean, ultimately, it's this area here is the swing high to be looking out for. Nevertheless, I think this is going to be an important level of resistance as well. 108.64, previous resistance and support. So as long as we don't break up above 108.64, then I think everything's hunky-dory. Quite honestly, I don't think the bounce is going to last very long. I don't even think that it's going to break up above 108.07. And as such, I think we're likely to sell off once more. Which reminds me, 108.07 is the same level in the DAX. So coincidence or not, euro dollar and the DAX looking at same levels today. But the bounce for me is unlikely to last. I think it will come back on trend soon enough. And I think the selling is likely to persist with further downside for euro dollar to come. Next, looking at dollar yen. Of course, people have been moving into dollar yen. We've been talking about for a number of weeks the potential for a bullish reversal for dollar yen. It took a while to come because this 104.32 proved pretty difficult in terms of a hurdle Well, we've certainly cleared that now, and crucially, we've cleared 107.49. So we are on a bullish path. I think we've seen a reversal, and I think we're going to see for the back end of this year, bullish price action for dollar yen. We can see, of course, 107.49. It's the previous resistance, so you'd be looking for that as newfound support if we were to see any sort of reversal. If I look in terms of the hourly time frame, we can see it's relatively clear what we're seeing in terms of price action for the time being. You can see, like I was saying, that 107.49 is here. So as long as we don't break, say, below 107.35, I think we're still likely to push onwards, and you can see we've seen a bit of a retracement, but we're starting to rally once more. So I think that we've seen a beginning of a trend reversal for dollar yen, and I do think there's going to be a lot left in the tank in terms of upside for dollar yen to come. Now, finally, I wanted to touch on the New Zealand dollar. Now, we did see an earthquake over the weekend in New Zealand. Magnitude 7.4, so a pretty heavy earthquake. We have seen markets sort of shift their expectations in terms of potential action, in terms of a potential cut from the RBNZ. And as such, we've seen further downside for this currency pair. This currency pair is a very interesting one anyway, because we were talking about the fact that we've seen this breakout from this wedge pattern, this wider wedge pattern. Then we rallied back into the 76.4 on this occasion. We've hit the 76.4s on a number of occasions. And certainly if we look back onto the weekly, we can see that the whole thing's a 76.4 retracement anyway. So you can see we've rallied, we've broken out of the wedge, we've rallied back into another 76.4, and we're selling off once more. This looks like a topping pattern for me, and as such, I expect further downside to come. In terms of the 4-hour chart, we can see that it is very consistent. 71.08 near-term resistance is certainly worth watching out for if we do see a bounce, but this is very clearly defined to the downside. I expect further losses to come. That's what we're seeing this hour. Near-term resistance 71.08. As long as we remain below there, it's likely we're going to see further losses to come, and I do expect that to happen. So further downside for the New Zealand dollar, irrespective of whether the RBNZ are going to cut rates or not next. I think we're clearly on a downtrend, and it's very consistent, which gives us good opportunities to get short. Looking at the commodity space, of course, we have seen significant downside this past week because of the fact that people are moving into those risk assets and moving away from the likes of gold and the likes of the yen. But also, interestingly, is that we've been seeing significant selling in terms of crude prices. But we'll start with gold, and you can see gold, I guess. We'll look firstly from a sort of wider perspective. This wedge pattern we were talking about at the beginning of the year, the breakout gave us this sort of bullish scenario for the majority of this year. Actually, around about halfway into the year, we've started weakening. We got this descending triangle pattern, broke lower from there, hit the 76.4, rallied, didn't manage to break the previous swing high, and now we're selling off once more. The crucial level to note here is 1200, right? 1200, if we break below that level, all of a sudden it looks like we're going to be in the doldrums once more, and this rally that we've been seeing throughout most of 2016, you know, a lot of it's going to be undone. But we haven't got there quite yet. We can see that we have broken below, crucially, is 1241, that 76.4 retracement alongside that previous swing low. So it doesn't look good, quite honestly, in terms of gold prices. If we look at the hourly time frame, we're seeing a bit of a rally, but 1230 is your near-term resistance. That's not been broken, and it's starting to weaken somewhat. So wouldn't be surprised to see it break lower from here. Even if it did break above 1230, I'd likely just be looking at it as a retracement of the 1265 downwards to 1212, and then you'd be looking at a potential rally up to, say, 1245, 1252s and alike. But I do think we've got further losses to come for gold. Finally, Brent crude is one market we've been watching very closely. You can see that we've come into this massive area of support at 45.23. Now, bear in mind that we not only have the potential for a big output of crude from the US under Donald Trump, but also if we did see a big rise in output from the US, we're unlikely to see a deal from OPEC in terms of a production cut. So everything points towards a potential reversal for Brent. Now, you can see here, it's a bit of a messy one, but we could see this as a head and shoulders formation. The crucial thing here is a break below 45.23. If we see that, a convincing break, then it looks like we're going to see significant losses. The next support level, key support level, 41.58. What are we seeing? Well, the hourly time frame shows you that actually we did break below 45.23, 45.35. We've come back up into this resistance zone, and now we're starting to weaken. At the moment, there's a little bit of hesitancy. I want to see this sell off once more. As long as we don't break up above 46.30, then I am bearish, and I do think we've got further in the tank towards the downside for Brent crude. That's it for today. Other than that, join us on IGTV and IG.com or follow me on Twitter. My name's Josh Mona here at IG. Have a good day and good luck trading. Thank you.